Inox Wind reported a strong set of Q2 results. The company reported a revenue increase of 98% and they've increased their EBITDA margin guidance as well. So to talk about the second quarter numbers and the outlook going ahead, we have Mr. Devansh Jain, the Executive Director, InoxGFL Group, joining in now. Devansh, good morning. Thank you so much for joining in. You have increased the margin guidance from 15% to 17%. Of course, you've spoken about moderation in margins going forward, but there's an increase in EBITDA margin guidance. Can you give us a sense of what led to this confidence of increasing your EBITDA margin guidance? And is there an updated execution guidance and revenues as well?
Hi, good morning, Sonal. Good to be back on CNBC. So we've upgraded guidance because Q1 and Q2 have been fairly strong for us. You're right, Q3 and Q4 will kind of normalize that. But we've upgraded guidance from 15 to 17% with the caveat there could be further increases to this due to a couple of factors. One, royalty payments subside from FY26. Two, there's been a lot of backward integration and strategic actions which we've been taking, such as backward integrating into having our own cranes. We've gone into strategic sourcing, tolling of transformers. And third, I think as we move forward, we'll have next year our 4X turbine being launched as well as larger blades. So for the coming financial year, I think we're on a strong wicket, but we've certainly upgraded guidance to 17% with the caveat that this could further increase in the coming financial year.
But Devansh, can you tell us what you expect in the second half of the year in terms of margins? Because Q1 margins were 21.3%, Q2 margins were 23.6%, which means we're looking at an average of 22%. And your full year guidance is 17% plus. So clearly margins are going to drop off in second half. So explain the reasons for that.
Rima, it really doesn't matter with respect to what's happening on a quarterly basis. From a full year perspective, we had guided for 15%. As I mentioned, we've upgraded that to 17%. Now, while Q1 and Q2 would have been higher, that's primarily because typically H1 is, from a seasonal perspective, it's lesser execution on the ground. We've also done a larger chunk of supplies as opposed to uniform amount of EPC activity. And as we move forward into Q3 and Q4, while we've guided for about 800 megawatts of supplies in this financial year, and we've done about 280, so that's a very large amount of supply yet to come in Q3, Q4. But you're going to have larger amount of execution happening on the ground as well. As a result of which, while supply margins are higher, EPC margins are slightly lower. So to that extent, you'll see a moderation on EPC on a Q3, Q4 basis, but full year still upgraded with respect to the guidance we've given out.
Okay. So, now what are the ordering trends looking like, Devansh? Are you saying plain vanilla wind or hybrid auctions? What are the discovered prices that you're seeing right now? And is there better bidding in terms of players being less aggressive? What's the ground situation like right now?
Look, I think the macroeconomic scenario is just mind-boggling. We're looking at about 350 gigs by 2030. You've got a lot of green hydrogen eventually kicking in. The larger ambition being to get to about 500 gigs. Having said that, I think where we are currently, we've seen about 12 gigawatts of ordering take place this year, which is a mix of hybrid, FDRE, and a little bit of plain vanilla wind. I think it's more and more focused on hybrid and FDRE. There are about 10 gigawatts of bids which are already in the public domain, which we should see getting awarded over the next 4 to 5 months over this financial year. Obviously, Q1 was an election quarter. So to that extent, you've seen a little bit of a hold up, but I think there's a lot of pent-up demand. There's a lot of pent-up order tenders which will still come out. So overall, I would tend to think this is only going to get larger and larger as we keep moving forward. With respect to pricing, you see, you've got a range from about 3 to say about, I would say 4.5. So plain vanilla wind would be, closer to about 3.5, depending on which state you're in. And then depending on whether you're talking of hybrid or whether you're talking of FDRE, pump storage, a little bit of battery, you'll see pricing moving up a little bit more than that.
Okay. You spoke about how higher execution will result in margins moderating marginally in H2. So talking purely about your execution, you're maintaining your full year execution target, I believe, of 800. megawatts for FY25. But for FY26, you're talking about a possibility that you will beat your guidance of 1,200 megawatts. Can you tell us what might lead to that? And you also have a 2 billion million watt guidance for FY27. What happens to that?
Look, I think we've been trying to beat investor expectations, trying to beat analyst expectations every quarter. And I would tend to err on the side of caution. Having said that, while we have upgraded guidances, we have upgraded execution targets over the past 3 or 4 quarters. At this point in time, we're sticking to the 1,200 megawatt guidance for FY26. Of course, there is a caveat that this could further be upgraded. It's simply driven by the fact that if you look at our order book, it's the highest ever order book we've had. It's about 3.3 gigawatt. And at this point in time, we are in discussions and negotiations for some very, very large deals across the board with some of the largest IPPs, whether it's tenders or IPPs and CNI customers. So as we move along, if you're going to see a larger and larger order book as we move forward, obviously that's going to lead to more and more execution or more and more supplies as we move forward. But let's wait for a couple of weeks and months, and then potentially we'll talk to the market with respect to what we expect. With respect to FY27, in any case, we've set out a broader target of being a 2 gigawatt play. I mean, if the market is going to move towards 8 to 10 gigawatts per annum, which is what the expectation is, and that's broadly a lot of the policy initiatives that the government is acting upon, be it transmission, be it connectivity. If that plays out, then potentially we could be larger than that as we move forward.
All right, so interesting times, and this is something that the investor community will track very closely. Devansh, thank you so much for joining in today with your take on Q2 numbers and, most importantly, the outlook going forward. That's the word coming in from Inox Wind. The stock is up around 6% on the back of strong set of numbers. Time for a short break now. We'll get you more on the markets on the other side of the short break. Stay tuned.